Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 6th of April, 2023. Thanks for joining me. This is episode number 2444. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, where are we now? Just taking a look here on our pre-market summary sheet from Convergent Trading. As always, reminder, twitter.com/conv trading. Be sure to follow, and you will get this in your feed. You'll get this in your feed at about 8:50 Eastern U.S. time every morning. The posture today is mixed again. Notice we're opening mixed, like we're basically just kind of sitting sideways on the overnight session. Even if we've had a move in the overnight session, we've tended to come back to up or down, 20 to 30 basis points, 50 basis points, something like that. And that puts us right in the center of the yellow mixed scale, and that's how we're opening today. So that's it. As far as key earnings, Constellation Brands, Levi Strauss, and RPM International, Lamb Weston, and that's pre-market. Not going to go over those. We'll only cover the big players in terms of earnings. Anybody can just do a search for an earnings calendar to keep up. The U.S. jobs report is due tomorrow. I want to remind you that the jobs report comes out at 8:30 Eastern U.S. time, 8:30 Eastern U.S. time, and the futures on indices close at 9:15. So they're giving us about 45 minutes to trade that number. And then the markets closed for Good Friday. Markets are closed in Europe. And the European markets also observe Monday after Easter Sunday, which is this weekend. So a long weekend this weekend. So just plan for that. Moving on, initial claims came out. Initial claims came out a little bit higher. It rang the bell here at 228,000 versus 200,000. This is higher. Remember, initial claims have been running relatively hot, usually coming in below expectations. So the market, what the market did is it popped higher right away, and then it went right back to the SOC, pushed through the SOC, consolidated at that SOC. And has traded a little bit lower since then. So the market's basically seeing that as yay for the Fed for interest rates, but also seeing that as a potential nay for unemployment and a potential recession going forward. So a lot to read there. The continuing claims number was pretty large relative to expectations. 1.823 million continuing claims versus 1.699 million. Today we have at 10 a.m. we do have Fed's Bullard, and that's it. It's very, very light on the schedule. Chinese Cakegen services PMI higher than previous. European construction PMI is mostly lower than previous. India holds rates in surprise decision. U.S. House Speaker McCarthy met with Taiwan's president. Discussion with Taiwan's president was very productive in that they may continue arms sales to Taiwan as well as strengthening economic cooperation, particularly with trade and technology. This, of course, is pissing off China. Kyiv reportedly willing to discuss future of Crimea with Moscow if its forces reach the border of the Russian-occupied peninsula. Amazon assessing plans to cut number of stock awards for employees in coming years due to adverse economic conditions. So further bad news from big boy Amazon. Looking at the S&P, The S&P is completely balanced this morning, 178,000 contracts traded. That is pretty much in line with expectations. Inventories 59% short. Remember, yesterday inventories were 63% short. Pretty much normal, really. Inventory slightly on the short side. Looking for a test of prior settle on the open, and then the range is 18 and a quarter points, which is in line with what we would consider to be normal. Historically, this is pretty low actually, because the mode for the overnight session is 31, as shown down below under overnight statistics. So it's just the way it is. One thing to remember though, just 1 second. One thing to remember though is today, this week is spring break. Spring break here in Chicago and various other major cities. I don't know where you are, but schools are out, so many people are gone this week, and this is part of what could potentially explain the lower volume and the slow trade. But I'm not looking for excuses, but this could be a contributor. What I did notice yesterday is that the S&P futures book was quite thick. We haven't seen it this thick, with 200 to 300 contracts up and down the book. Very unusual. Reminds me of the old days. Here's where we are. So let's look at where we are, what we've done. What have we done? What are we trying to do? How good of a job are we doing? And what's likely to happen next? Those are the questions we seek to answer repeatedly throughout the day and while doing our homework. I talked yesterday about this rounded top kind of rollover. Talked yesterday about the fact that the overnight session held this distribution. Yesterday when we came in, we traded right in that distribution, the low being 41.15 quarter, and the overnight low is 17 even, which happened to be yesterday's settlement as well. And we talked about the likelihood that we would pull back to settlement yesterday and then push down. That was the primary scenario. Here's your primary scenario. Oops. This is your primary scenario here, expecting it to go sideways and then expecting it to push down, double O, okay, and then ultimately was looking for 88, which could not get. So primary scenario was spot on. We're playing out the second scenario this session here. So we've got the secondary scenario kind of playing out in today's session. So where are we? We are right here against yesterday's profile. So yesterday, completely balanced, really completely balanced trade, finishing at the upper end of the value area. And we're sitting right on top of value in the point of control currently, basically. So really a very balanced session. We do have the overnight point of control right here. Overnight point of control. We do have VWAP and mid all on top of each other at 41.15. If you recall, 41.15 was the low of 2 days ago, and we are basing so far today. So to me, this does look like it is trying to find a low, and it's doing a pretty decent job of doing so. Yesterday, it had a pretty decent sequence of higher lows, and then the overnight session is seeing the same kind of thing. It's spilling a little bit right now, but the market is doing a good job hammering out prices that buyers are interested in at the moment. This is what what we need to take away is that it seems to be basing. We did make a good run into that 2350, which was the high from a while ago. So let's take a look at that. So if you look here, right in here in early March, we traded in this 23 to this kind of 20 to 28 area. Where I got the 4087 yesterday from is right here. So the S&P has turned over itself. So we've had a decent run. We've got poor structure right there, and a little bit there, a little bit there. We've got poor structure. We've made a nice little run, and we've turned over. And now we've built ourselves a nice little base here at 4100. So the 4100 didn't give up any room yesterday, and if it had, I would have expected, as I said yesterday, I would have expected it to fill this notch out in the profile, this low volume node, and pull back to right here. So that brings us back to a base, and then we start getting into the meat of the 4080 consolidation area. And then this morning, despite the fact that we've put in lower highs, we're starting the one time frame down. I believe the high from yesterday is relatively vulnerable. That high is 41.2775 to 27.75. So any push higher is going to gun for 27.75. And then the ultimate target on the way up is again the 41 area right here, this notch out in the profile, the low volume node. So what we're doing is we're working ourselves around this kind of high density, high volume area right now, and we're in the middle of the balance of it based on the most recent action. So if we sum up all of the volume in here, the highest volume spot is exactly where we closed yesterday, 41.17. The market's in balance currently. Looking at the relative delta, the relative delta has been pretty decent here. It's been moving with price, but this move down seems to get some pretty good participation across the board. So we did, as the number came out right here, we popped higher and then came through and traded below, and then we traded basically this kind of SOC swing, okay, and we broke that swing to the downside. This is kind of bearish action. I don't know what to make of that at the moment. I'm just being honest with you. This kind of action is very difficult to interpret because it's just a drift. What we do know is that the overnight session is remained inside of yesterday's auction, and then the overnight auction is right there on top of the day auction. So again, I said this before, the prior point of control, the current point of control, mid VWAP on top of each other, and we're trying to trade away from that. This is very likely to be a magnet here, the 41.15. We're likely to slosh up and down through the prior VPOC and 41.15 for a bit before we base. So this is the kind of day where you want to just sit back and let the market decide what it wants to do. And on top of that, we just have the one Fed speaker, Fed's Bullard, who can really move the markets. They have before. And we just need to wait and see which side of the market is actually taking control. We don't, based on our homework, on my homework, I don't see a lot of good clues. Yes, the delta is moving down. Price is balanced so far. It continues to be balanced. Delta is moving down, but that doesn't mean anything. It might open and pull right back up to 41.17 for a gap to settle trade from 41.08, and then sit sideways until it decides to break either the overnight high or the overnight low. Until that happens, there's not much for me to do. Okay, I would suggest, if you were trading for me, I would tell you, hey, don't trade for the first half hour minimum. Let the market kind of figure itself out. Let's take a look at the Nasdaq. The Nasdaq surprisingly caught up. The Nasdaq was very weak yesterday. It caught up pretty quickly. Remember, the Nasdaq, as the S&P sold, so the S&P did this, and then yesterday the S&P did this. And despite the S&P selling off, the Nasdaq maintained a higher low, which I talked about yesterday, and then it finally caught up in the NQ. And I believe I put this on this image here when I talked about the NQ. Let's see if I did. Let's see if I'm lying. 31, yeah, 13,125 was what I was looking for on the Nasdaq here. 13,125, and what it did. So the 13,125 pushed right through yesterday, but the expectation is that it's likely to pull it back to at least that area, this low volume node here, this zone. That's what I expected, and ended up pulling back into the balance of this day and staying in balance with this day. So the Nasdaq to me looks relatively weak as well. The NQ, if it gives this up, the NQ has a very clear kind of double prong high volume zone right into the 12,900, about the 12,925 to 12,875 or so. These would be the next key test areas. The Nasdaq may have resistance on the way up, right up here, and so the NQ looks weak. Again, it's trading at the lower end of the range here. And it's likely what I expected in Nasdaq, which is faster moving, which actually might get my attention today, is I expect an open that breaks. I expect an open that breaks the overnight, but I'm looking for the Nasdaq to rebalance at 13,080, consolidate, and then from there I can't tell whether it finds a base and starts moving higher or not. That's what the NQ looks like. I want to look at the TPO detail and go over it with you here real quick. Now that we have pulled back across these days, so you see we had a run away from the last composite run. Now these two are on top of each other, so we merge those to see what's going on there. And then now this is on top of, is in line with what we just merged, plus Friday's rally. So we merge those together as well to find out where balance is and what's going on. And so we're trading at 4107. Looks like balance for this whole area really is 4117, probably in volume, and in TPO 4127.50. So this is a profile that's showing us that the market is really just kind of okay, or is okay with these prices and is in balance, and nothing dramatic is going on here other than the market's effectively discovering price back and forth. So if we go back to our intraday chart, and we merge these, let's do that real quick. So we merge this day, this day, this day, and this day. We'll get a profile. See that on this profile 4117. So you see this prior settle is in line with the composite of this excuse me, with this composite of this entire area. And so what this is saying is that this is very likely to be a magnet this morning. Again, I expect this thing to open, chop around, but at some point get back to prior settle, give us a gap to settle trade this morning. And of course, 4107 to 17 is just 10 points. So watch your risk reward on that. Okay, so that's all I have for you. Same story for the NQ in terms of these composites. It's time to scrunch all of these together um, to see where the overall auction is taking us. Like that. Like that. Okay, double prong. The NASDAQ again is at the low end of this, and it's kind of breaching in between the low end of this profile, which has a weak low. I expect the NASDAQ to start making its way through the 13,000 and into these next areas again, down into the 12,850 area or so. Okay, I'll let you go. It's been 20 minutes. It's long enough. Good luck, and oh, sorry, crude. Crude, look at this thing. Nothing. Gap, and everybody's afraid to commit. Everybody's just afraid to commit here. Crude has just built itself a big old fat composite and hasn't done a thing since then. Look at that. We're opening on top of balance, and we are just holding balance. We've already closed settlement. Crude isn't doing any discovery at all. It's just in balance heaven. Everybody loves these prices, and everybody's content with the $80 handle if you're looking at crude. Good luck today, and I'll catch you tomorrow. Take care.